Okay, guys, welcome. So, today we're going to be looking at Ondo Finance. It's been a little while since I've done another YouTube video, but this is this is an exciting one, and not gonna lie, I am incredibly bullish on Ondo Finance for God a number of reasons. Like usual, we're just gonna wing these videos. We always do, and we're just gonna try and dive into a little bit of Ondo and into the charts from high time frame perspective into the intraday. We can look at potential bids and what's just occurred and all that good stuff. But yeah, so Ondo, I mean, it's pretty obvious at this point that Ondo Finance is the real world asset category leader, okay, by far. Um, Ondo is backed by Blackrock, okay, so they're partnered with Blackrock, and you can see that on their website. What's interesting is that Ondo Finance is actually their exec team is actually. Let me just move the puppy. Right, Ondo Finance is, in fact, their executive team are people from Goldman Sachs. Okay, so you can see why there's the partnership with BlackRock there. Um, so yeah, you know, Ondo Finance was launched by literally former Goldman Sachs traders. So um, this is why Ondo has got massive backing from major financial firms like Panthera, for example. Okay, so they back Ondo Finance. You've got Coinbase Ventures, who again they back Ondo Finance, and this is 100% a must-have in anyone's portfolios. It's a must-have. Now, obviously, it is on the higher end of the market cap, so it is 2 billion, almost 2 billion market cap. Okay, but the sky's the limit, right? The sky's the limit with protocols such as these. Okay, and it kind of goes a lot beyond what a lot of these other real world asset protocols are doing, right? And if we look at the size of the real world asset category at the moment, I can bet it's not even worth more than 20 billion, if I can find it. See, okay, so there we go. Real world assets. This is on CoinGecko, and the market cap of real world assets is still less than 10 billion. And Ondo Finance makes up 2 billion of that. Okay, so um, BlackRock, obviously they are making great strides now into real world assets and tokenizing um, financial products like um, uh, let's see, like yield products. You've got US Treasuries, you've got corporate bonds and everything like that. So that's what BlackRock are venturing in now and tokenizing all that. And their partner they've partnered with Ondo Finance, and Ondo Finance have backed that fund with 93 or 95 million dollars. Okay, so to me personally, it's a no-brainer. It's a no-brainer. If BlackRock's tokenized fund, BUIDL fund, goes to $16 trillion by 2030, as they predict, then where do you think a category such as real world assets is going to end up, and same for Ondo. Okay, where do you think Ondo is gonna end up? During this cycle, maybe during next cycle. It could be within the next year, 2 years, anything like that, right? If you take a comparison between real world assets to any of the other categories, okay, what else have you got? You've got metaverse, $15 billion market cap as a category. Okay, you've got you've got AI, which I'm incredibly bullish on AI, but that's now $40 billion in market cap. Okay, Beepin, 31 billion in market cap, as a category. Okay, and then you've got memes, right? Memes are nearly 70 billion in market cap as a category. So you can see how incredibly undervalued and unsaturated the real world asset category is in crypto at the moment, and how brand new it is. This is brand new as of this cycle. Okay, wasn't a previous cycle thing like game and metaverse, and obviously memes have been around forever. But this cycle, it is more like AI. It's more real world assets and deepen. But real world assets they're the newest of the new. Okay, so that's me just going on a little bit. I'm incredibly bullish on Ondo Finance. I think sky's the limit with Ondo, 100%. What it may, it's always hard to predict the potential upside of where this can go. I always said to myself, I can see this going to, 10 to 15 billion. Okay, 10 to 15 billion, which would work out between, it's work out about 10 to, 10, I mean, $10 to $15. Yeah, but I think it's potentially going to go a lot higher than that. A lot higher than that. Maybe even towards, depends when the cycle top is, really. There's a lot of variables to consider. But if we get, for example, the golden bull run and everything works out, and a lot of these potential black swan events that don't occur, and US elections, they go ahead fine, Trump wins, whichever, we don't want Biden in again, then this is likely going to extend a lot further. But yeah, I'd be conservative and say 10 to 15 billion market cap. Okay, which is still, it's still a good 5 to, 5 to 8x. Yeah, so 5 to 8, 5 to 7x just from this point, and we may even see that towards late this year, early next year. But that's me being extremely conservative. I think it is going to potentially go a lot higher than that, especially when you consider that the real world asset category is only less than $10 billion. Okay, and then you've got memes on the other hand, which are like 70 billion. And you have to remember the whole market cap of crypto at the moment is only $2.7 trillion. Okay, it's not even broke at the last all-time high around just under $3.1 trillion. The market cap, we haven't even broke that yet. Okay, so you always have to remember we are not in that phase of the cycle yet of, as Raoul Powell will say, the banana zone. Okay, it's just pure parabola. We haven't hit that phase of the cycle yet, and that's where majority of the gains are made. Okay, we're still in. Well, this part of the cycle is very choppy. It's been like that for 6-7 weeks, even longer in altcoins in 8 weeks. Okay, so the BUIDL Blackrock tokenized fund. I'm not going to go through this. I'm going to add a link into the YouTube video so you can take a look yourself. I will add the link to Ondo Finance so you can have a look to the website yourself and everything else. all the different types of, articles and stuff like they've got on there. You can see they're backed by the best Founders Fund, Coinbase, which is Coinbase Ventures, and Pantera. Okay, so what else did I want to go through with Ondo? We've gone through Blackrock, Ondo partnership, what they've been backed by. So I guess it's time to go through the chart then, I think. So, right, we're just going to look at the 4 hour time frame for now. Okay. Again, the markets are just choppy. So you can see from Ondo, we back in, when was this now? So back late May. Okay, we put in a big. Let me get me drawing thing in. Put in a big expansive move up. Okay, and then what always follows expansion and well, in Wyckoff terms, it's markup. Okay, I'm not going to try and go into too much about market structure, but Wyckoff, it's markup. Elliott wave theory, it's an impulsive leg, it's an impulsive move up, and in this term, we're just talking about an expansion move up. Okay, that's what we've just had from again consolidation. Okay, yeah. See, I'm going to end up talking about market structure now. Consolidation. What follows consolidation? Expansion. Okay, the bias is still up. Okay, the trend is still up. You trade with momentum. The momentum is higher. All right, not lower. We're not targeting, deep reversals. They tend to be shallow reversals, but larger expansion moves higher. Okay, so just keep that in mind. Anything that you go and look at charting wise, keep in mind the trend is still up. June is going to potentially be a really good month. That's what I think. May was terrible. April was terrible. We've just had a terrible last 8 weeks. Okay, also, especially in altcoins, it's time for a little bit of up only. Okay, and that's what we're going to get. We're going to get these shallow retracements and then another expansion leg up. Okay, so that's what we just had, and you can see again. What do we have? We have reaccumulation. Okay, highlighted by the yellow box. Right, you see that? Reaccumulation. Okay, we had this little wick. Right, so we are targeting this wick. Okay, from our reaccumulation zone, our new consolidation, from this big expansion move up, this markup move. Okay, we go and just put this little wick in. Okay, which is liquidity. Okay, this is sell side liquidity marked by the X. Okay, you see that? Yeah, right. We start to consolidate. Okay, reaccumulate. Right. We're showing no strength to come and tackle the highs of the consolidation range. Okay, we're drawing to sell side liquidity. Okay, what do we have? We have a little fake out to take out. Fake out to take out. Oh my god. Right, I'm going to start again with that. We have these two equal lows. Okay, let me get rid of this. I'm going to get trolled massively for saying fake out to take out now. I just know it. Right, we have sell side liquidity there. See, this is all about winging it. I always wing the YouTube videos. Okay, we have another low here, another swing low. Okay, another swing low. This forms the bottom of the range. Okay, this new reaccumulation consolidation zone. Right, can you see that? Okay, so we've got two lows, two equal lows. Okay, You know the relevance of equal lows. What do retail see this as? Retail sees this as support. Okay. What do retail like to do at support? They like to go and take longs. Okay, late longers. And you know, we can go and replay this after the time that we put in. Okay. After the moment that we had put in both the equal lows, right? What are retail going to do? They're setting all their bids here. They're setting the bids back on the range lows of this consolidation. Okay. You know, you can, I mean, if you look at it from a pattern potential perspective, you've got what could be, okay, descending triangle, which would indicate downside, but then, you know, go and watch what happens. Okay. Is that fast enough? Right. Okay, so you have a fake out, right, from potentially this descending triangle. Right. Let's keep watching. Okay, see, so that's our fake out. What you have a sweep on liquidity here. Okay, we'll mark this by an X. This is buy side liquidity. Okay, yeah, let's keep playing it. See how we're seeing candle closures below? Yeah, just below these two highs here after taking the sweep. See? And then what happens? Okay, remember this is the 4 hour time frame, right? Now, what do you think this is? Okay, where's my little fella? Okay, this is a soup. It's tail soup, right? Now, tail soups are just, it's a term coined by ICT. A lot of people, it's nothing, people may look at this and think, oh, that's a swing failure pattern. Well, um, it's not, because what we're looking at here is we're looking at a run on liquidity, okay, which is here, which is the buy side liquidity here, the two highs here, okay, a run on liquidity, right, and then candle closures below, which we've just got two 4 hour candle closures below from the sweep on liquidity, and then it forces it back down, okay. Now this is all just to trap retail traders in, okay, to think it's going higher. This is the fake out. This is the move. This is the fake out to which gave us eventually the sweep on the sell side liquidity here. Okay, do you see that? So you have the two highs, the two 4 hour equal highs. Okay, if you move down the time frames on this, okay, yeah, you can see we go and take it out, right? We got that big fake out move from the descending triangle, right? Let's go back to 4 hour even. Okay, big fake out. People probably will see this as a back test. Yeah, before higher. Okay, and then what does it do? It just comes chasing these two equal lows. Okay, comes chasing support. Takes out late longers. These are all late longers. Okay, and that's exactly what happened, right? Without a little bit of market fuckery first, see? So we go take out the two equal lows support, go liquidate a bunch of people. And then what we have is we have a little bounce back into the range, back into the consolidation, the reaccumulation zone, okay, which you'll see now. Or a bounce back, which is a fake out back into the range, before ultimately targeting this sell side liquidity. Okay, you see that? And now what happens? Look at that. Immediate strength. Immediate strength in the bounce. Right? This is exactly how equity equities trade. Sip of water. It's exactly how equities trade. Yeah, this is textbook. This is textbook to just trapping retail traders. And you have to remember, market makers, what do they want? They want retail liquidity. Okay, well, that's what they've just got, because retail would have been long in this support, right? Which they've just went and come and liquidated that, come and took their sell side liquidity, all that retail liquidity there for an immediate bounce back up. And this begins our expansion leg then, okay? And it's just the same there, right? A liquidity sweep would take out people who were shorting here, okay, and their stops have been swept just off this wick, okay, till souped, the candle closures below, again below, not a back test, comes crashing through, the equal lows to chase liquidity. This is our draw on liquidity, okay, and that's, I mean, there's no relevance in this low because it's a Saturday. It's a Saturday low, so it's not like it's a weekly low or daily low or anything like that. It's a Saturday. There's no relevance in this aside from it's sell side liquidity. That's our draw on liquidity, and there was a lot of patterns being painted out support that we were going to see no strength in chasing buy side liquidity, the highs of the range, because we were having these lower swing highs every single time you see, okay, before a liquidity sweep up, and we were forming the support, these two equal lows, before coming crashing right through. And then from that point onwards, what do we have? We have the expansion leg up, okay, and then it just moved on out of here, right? Okay, now you see what happened there. See how it just retested support and didn't come back lower. Yeah, off the two equal lows, candle closes above, then expansion move up. Put this on a little bit faster, I think. Yeah, see, and that's the expansion move. Okay, so without trying to go too much on now, let's come out of this. Right, we've just taken sell side liquidity here. Okay, we've then just taken from the expansion move up, expansion leg up, which is this move out from manipulation. So yeah, this is accumulation. Okay, purple box, accumulation, which is consolidation. Manipulation is always the trap in retail traders. We've seen this on Bitcoin when we came down to 57k. Then we're now in that expansion leg, and actually, in fact, it's interesting because we are seeing this pattern play out now. Okay, so we seen it with Bitcoin accumulation. I'll do another video on it. Manipulation, and we're in an expansion leg on Bitcoin, so we're still hovering around 71k, which if you refer to Ondo's chart, it's kind of towards the top end of the reaccumulation range, okay? Ondo Finance has led Bitcoin in a way and broke out of the previous reaccumulation range from the likes of May and put in a new all-time high and reconsolidating again, okay? So that's why overall I think the trend is up. If we get any shallow pullbacks like we are now, then they are instant bids, okay? Because I think Bitcoin is this month is preparing to break all-time high, but I'll go into that in the Bitcoin video, right? So we've got that expansion leg up. This is accumulation, manipulation, okay? Distribution, but I like to say expansion, okay? And I think it makes a lot more sense for people if we say expansion as well. right? So we've got an expansion move up. Expansion move has broke accumulation range highs. Okay, expansion move up, right? Okay, you can see that. Just see how many green candles there was, right? So now potential bids. In fact, I'm not done there yet, am I? I'm not done there yet, right? We're looking at the dealing range. Okay, so we've taken sell side liquidity. Okay, see, this is what happens when we go on the fly with these YouTube videos, right? We're taking sell side liquidity. Okay, so this is our new low. Okay, this is our new dealing range low. Okay, dealing range theory is just the concept to really you just take the lowest swing low after taking liquidity and the highest swing high after taking liquidity. Okay, so this is our lowest swing low after taking sell side liquidity. Okay, so that's our dealing range low. Okay, and then we've taken the accumulation range. Okay, we've put in a high here, right? We've came back to retest the previous all-time high of the consolidation. Okay, you see, right? And then we've came up and we've swept this buy side liquidity here. Okay, which is just that there. You see this swing high come up, taking liquidity there. Remember, the X always marks out liquidity, taking buy side liquidity. We failed to take it there. Okay, so this is our dealing range high. This is our highest swing high. Okay, so this all is our dealing range now, right? And the idea is to give you just targets on a potential pullback. Okay, so what we have is, and what we're looking at is, you can see here from the manipulation range. Okay, you can see how Ondo filled the buy side imbalance, sell side inefficiency here. Okay, perfect, right? So out of the manipulation range, it came up, retested this fair value gap. Okay, remember fair value gaps, they are displacements, they're impulsive moves. Okay, and it's always three. Ideally, you want three candles. Okay, 1, 2, 3. Okay, in one direction. You've got the slight pullback. Okay, into the fair value gap by the BC. Okay, and to further support that, we actually have not a strong inverse fair value gap, but it is one. Okay, we've got an inverse fair value gap here. Okay, which is just, well, it's just the opposite of a normal fair value gap, right? And you can see how that, in fact, retested perfectly on the consequent encroachment. Okay, right there, the middle 50% line of that fair value gap. Okay, so now we have plenty of breaks of structure here, but we've got a break of structure here, okay, which is right on our 50, pretty much right on our 50% level equilibrium of our dealing range. Okay, so that's our break of structure. Where's break of structure? Okay, there we go. There's our break of structure, positive break of structure. It's to indicate a new uptrend, or continuation. And we have plenty of breaks of structure here as well, but well, that's our change of character just here, and pullback. This is our break of structure, mid time frame break of structure, right? Which is around our 50% level. And what else do we have at the 50% level? Right? We have another BISI, okay, fair value gap, right? Okay, right, buy side imbalance, sell side inefficiency. Now, remember when you're drawing out fair value gaps, you want, obviously you have to have a space between the candles. Okay, so this is our space, this is our gap, right? Gap, okay? And then you want the wick high of, if we're in an uptrend, we've got the wick high here and then the wick low here, and then that's our gap in between. Okay, and this is perfectly on our 50% level, right? This fair value gap. Okay, so this is why I'd said the other day in Jupiter Analytics that I'm looking at $1.28, $1.29 for any, additional positions. I'm with the likes of Ondo. I'm trading a lot of margin with Ondo at the moment as well. So I'm going to be adding to my margin at this equilibrium level. I don't think we come much further. I don't think we come and retest anything else. There is nothing to draw us here, okay, much lower to retest anything, right? We've already filled this fair value gap. There's nothing else to suggest there's another fair value gap. If we move to the 12-hour, what do we have? The 12-hour supports this 4-hour fair value gap. Okay, let me just make that. Okay, 4-hour, yeah, and 12-hour, okay. So there's a lot of confluence there that this big impulsive move that was put in on Ondo should see a retracement to rebalance price action. Okay, it always happens. It always happens, and this is exactly what I think. I think we now, from our new reaccumulation zone, remember, very similar to here. Okay, we go put in the high, we fail to retest that high. Okay, we start drawing down a little bit. Okay, just like here, we start slowly drawing down. It's just consolidation, right? And then we get manipulation out of the range. We get manipulation out of the range, out of the reaccumulation, out of the consolidation to come and take out support. Okay, and what will retail see all this as? These range lows. Okay, we can. Okay, it's not an odd block, but we can just make this. Just get rid of the middle line, right? What will retail see this as? Support. Okay. So retail are going to be all in Ondo, long and Ondo at this moment of time. Okay. Right. What I'd like to see, just like how we did here, is again, we get manipulation. Okay. I don't know potentially when. Manipulation comes into, takes out, that's terrible. Where's my arrow? Okay, comes to take out the lows, the range lows here. Okay, right into our, Christ alive, what am I doing there? Right, that's why, because I've not got the thing set right. Comes to take out support, comes to take out the range lows, comes to fill our fair value gap. Okay, it might not fill all of it, might just be the 50% level, consequent encroachment, which is also our confluence of our 50% dealing range. Okay, don't think it comes much lower because that'll be a deeper retracement, right? And then we then put in our expansion leg up again. Okay, so any bids, $1.25, $1.28. I've done it again, haven't I? Right, and then we go and target the likes of this dealing range high. We'll then set a new dealing range. Okay, that is what I'm ultimately looking at, right? And we might have a similar situation there where we have a fake out to come and retest potentially these highs, the dealing range highs or the consolidation range highs, and ultimately I don't think it breaks. Okay, I think we come and take these lows out. Okay, we're not taking these. These are two. equal wick lows here, okay? Relatively equal lows here, right? As I said, that's what retail sees as support. So we come and take them out, and then we're back to up only then. Right, that's our draw on liquidity. Okay, sell side liquidity. Manipulation, then expansion move up. Right. Um, we may just pretend if Bitcoin goes and puts in a new all-time high, then you have to remember this is a game of probabilities. Probabilities. Um, there's lots of different variables that you have to consider when charting or trading or anything like that. So yeah, in short, that's what I think is going to potentially happen. I've got bids sitting there now in this fair value gap, and then I think the new leg starts. June is likely the month that we see new all-time high for Bitcoin. So it's all dependent on when that all-time high, happens. Could be potentially next week, okay, or 2 weeks from now. But ultimately, I think we see this with Ondo first before higher. Um, yeah, I think if we start to, there's nothing really to look on from an intraday time frame. This does support a little bit more upside, I think, on the intraday. Yeah, this does support a little bit more upside on the intraday, so yeah, I'd say potentially a reversal back into $1.36. Okay, $1.36, and then we just come and chase some liquidity here, okay, and that's potentially an intraday settle, but it's just pure chop at the moment, okay. So that's all you can expect from an intraday, and it's Friday. We may potentially get some excitement over the weekend. That could be even when Bitcoin puts in its all-time high. But yeah, ultimately, cheeky bids, $1.28, $1.29 before higher. If we start seeing big moves up in the likes of Bitcoin or anything like that, then in fact, you can see even on the 4 hour, we do have it residing in a SIBI there, sell side in bonds, buy side in efficiency. Okay, and it's fine wicking up um, and above. You can see how this retested our 25% level of our dealing range. See, that's where most of the consolidation is. Okay, and then if you move down into the time frames, into the 30 minutes, ideally, what you want to see is some sort of um, you want to start seeing some moves being made. Okay, potentially take this wick low. Okay, it might come up a little bit, then into that, and then you go and target liquidity again or something. Yeah, before lower, right? And that might potentially happen over the weekend. But yeah, more so from a mid-time frame perspective, I do think we see manipulation into the BISI. But yeah, that's practically yeah. I don't think there's anything else. So yeah, even on a daily time frame, I know this video was getting on a little bit now, but even on a daily time frame, you can see how we've got confluence of that BISI again. Okay, see big gap, See, but this is more of a measuring gap now. We've got the wick high here, gap in between, no wicks in, and then the wick low there. So yeah, and you can see from a daily time frame. Oh yeah, I don't think we actually explored this turtle soup, did we? Don't think you can see from the daily time frame where we turtle souped. Okay, got the buy side liquidity sweep. Okay, sweep there, candle closures below, daily candle closures below, and now you can see we're chasing after sweeping liquidity there, the range highs there. We're now chasing the drawn liquidity, which is this sell side liquidity here, this wick low, into the BUIDL. So yeah, ultimately that's what I think. I'm not going to blabber on too much now. I hope that was an informative video. Please do me a favour, share, like, subscribe, all that good stuff. And yeah, thank you. I'm going to get some more videos out, so I'm going to get to work.